Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeat.com, and this is Trading Places Live. It's Thursday, June 8th, 2023, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we see that futures are a little bit mixed. We've got currently Dow futures down 12, S&P 500 futures up 1, NASDAQ futures down 8, so mostly around the flat line. Crude oil prices up nearly 1% this morning, back above $73 a barrel. And the U.S. 10-year Treasury yield up 3 basis points, 3.82%. Still quite a ways to go to get back to that 4.3% level, but also quite a ways off of the recent lows that was down to 3.20s. So kind of sitting in the middle of that wide, more intermediate term range. But we're going to talk about the Treasury yields in just a bit. Let's go ahead and go through the agenda. Got a lot today. Going to go over. Hope to get through a large number of charts. So those of you who like to go through lots of charts, I think this will be the show for you. But let me take a look first at the agenda. So we'll start off with the daily market recap, talking technically, chart of the day, charts, and more charts. Earnings spotlight, and the 3 you must see. Got a lot to go over, so let's get into it. Yesterday, Wednesday, June the 7th, we saw the Dow Jones Industrial Average gain 92 points. The S&P 500 dropped 16 points. The NASDAQ dropped 171 points. But mid caps up 38, small caps up 29. Look at the percentages. Small caps up 2.4%. Mid caps up 1.52%. Meanwhile, on the other end of the spectrum, NASDAQ, we're seeing money rotating away from those NASDAQ stocks. Semiconductors, software, internet, stocks that have been leading us throughout much of 2023, they've been going down. They've been, kind of stagnating and then dropping here yesterday, having pretty big down days, many of them. And that money, fortunately, not leaving the market. Instead, rotating into areas that have not been performing well. Mid caps, small caps. Look down here at the leadership among the sectors. Energy on top again. Energy back above its 50-day moving average, closing at 82.13, 50-day moving average 81.99. On that most recent low, slight positive divergence on the PPO, so I think we're getting at least a short-term pop to the upside. Energy up 2.65% on Wednesday. Real estate up 1.84%. Check out this overhead resistance at about 38, getting close. I think real estate's going to make that breakout. Utilities up 1.7%, essentially holding on to what I would characterize as fairly significant price support. We had 3 bottoms just below 64, maybe down to around the 63 level. And then recently got back down to 64 again. Now we're turning back up. Went through the 20-day moving average yesterday, at least a good short-term sign. On the bottom, what's not working? What didn't work yesterday? The aggressive groups. Technology, 1.49% down. Communication services, 1.12% down. These groups have been extremely extended, very overbought. We've been wondering when might we get a little pullback? I think it started. I'm seeing I saw yesterday a lot of topping candles in many of those areas. And we've got options expiring next week. And a lot of these stocks, I haven't even begun to look at option expiration and Max Payne, but I'm sure there are a lot of stocks in this area that have a tremendous amount of net in the money call premium. So it would not surprise me at all as you go into option expiration week. This is kind of the historical norm anyway, that things that are leading heading into option expiration week tend to struggle a little bit. Maybe we're getting started here just a couple days early, but technology, communication services not performing well. Now, the thing is, does the overall market take a big hit when the leaders take a big hit? And the answer is no. The S&P 500, was it down? Yes. Down a little bit more than 1/3 of 1%. I mean, just kind of consolidating. That's not bad. Because what's happening, instead of everything selling off, we've got the aggressive group selling off, but we've got money rotating. This is the real test of a bull market. What we're going to see maybe over the next week, 2 weeks, I don't know. I think we'll have another pre-earnings run up later in June into July. What happens between now and then, I'm not sure. But one big test for a bull market is when you start to see selling in the leaders, does the money leave the market, taking the indices down? In other words, does everything go down? Or is it rotation? Yesterday, it was pretty clear to me it was rotation. Small caps and mid caps took off. Industrials took off. Financials doing well. We had the defensive groups coming back to life a little bit. Hey, I'm not looking for these groups to lead the market to the upside over a long period of time. That would not be bullish at all. But we don't want them breaking down. And they were all down near key support. So I think the rotation and the money coming in to these areas is right on time. And I would like to see it extend here for a little bit of time. So I'd be looking for a little bit of what we've been seeing over the last week, money rotating out of those aggressive areas and money rotating into the more value-oriented areas and the small caps and the mid caps. Again, things that haven't been working. This has been a straight up move for the last 5 or 6 sessions in mid caps and small caps. And it wasn't like I haven't talked about mid caps and small caps. And the fact that I thought they were prepping for a big advance. I'm not talking about the advance they've had just now. I think we've got more room. I wouldn't be surprised to see the small cap index push toward 1,300. Right now, we're 1,219. So we still got 5-6% probably, just to get back up into that 1,280, 1,300 area where we saw it earlier in 2023. 10-year Treasury yield. First of all, initial jobless claims will be out later today, expecting 240,000 there. Last week was 232,000. So I don't know, it's about a 3% jump or so, maybe a little bit more than that. But that's really the only economic report out balance of the week. We've got the Fed coming up next Tuesday and Wednesday. Outside of that, there's really not much in terms of economic news, and there's not a whole lot in terms of earnings news. So I think a lot of this is just technicals based. And right now, what I'm seeing in terms of technicals is the rotation that I talked about. And so that's what I would continue to look for. As far as the 10-year Treasury yield, 382, up to maybe 385, 386. This is a pretty key area. Early today, as I mentioned at the open, 382, up 2-3 basis points this morning. Do we continue to push higher throughout the day, or is this kind of an area of a top? You can see we had gap resistance, the bottom of gap resistance right around 380. Top of the gap resistance is all the way up about 392, 393. So if we break above these recent highs, I would be looking next for that 392, fill this gap, see what happens from there. My guess is we're probably seeing a lot of selling in the Treasury market, sending the yields higher prior to the Fed meeting. I think once the Fed comes and goes, I think you'll see a lot of buying in the 10-year Treasury yield, and I suspect we'll see the yields drop. That's what I'm anticipating. May happen, may not. Guess we'll all find out. S&P 500. So let's move on to talking technically. And I mean, when I look at the S&P 500, I see one key level. There we go. I see one key level, 43.05. We've now had 2 tests, 42.99. Yesterday's high, 42.99.19. If we go back to Monday, the high, 42.99.28. The high close, 43.05.20. That was back on August 16th. If you're more of an intraday, if you like to look at resistance on an intraday basis, I'm more of a close. I like opens and closes. But if you like intraday, 43.25.28. 43.25.28. That was the level that we reached back in mid-August on the S&P 500. So a lot of work to do still. That's a very, very significant level, especially for those of you looking at a long-term chart. That was a very significant reaction high. So let's keep that 43.05 level or 43.25, if you will. You move through 43.25 and there's really not anything left at this point meaningful, in my opinion, until you reach the all-time highs. So watch that level closely. I think we're going to go through it. I don't know that we're going to go through it just yet. We've got options expiring, like I said, next week. That could be reason for a pullback. I could see 4,200 easy back to the downside. That's only 1.5%. That would just be the 20-day test. That's at 41.98 right now and rising. So do we go below that? I doubt it. Not if the rotation continues, but I could see a move back down. Some of the higher market cap companies that have been leading the market, if they continue to pull back, which I think they probably will between now and the end of next week or the beginning of the following week, next 7 to 10 days, I wouldn't be at all surprised to see some of the big stocks down quite a bit. And maybe if we have time, we'll go through and try and take a look at some of those. Next up, NASDAQ 100. There's a big reversal, and that's as a result of software, semiconductors, internet stocks. I guess a little bit of a reversal in some of the autos. Tesla closing on its low or close to its low yesterday after being up again intraday. So I think we've got potentially some more weakness. The PPO looks great, pointing up. So I suspect selling will be held to maybe that 20-day or maybe just slightly below. That's what I was talking about. I don't know, a few days ago, I said maybe 14,000. That's right where the 20-day is sitting right now, 14,000.24. You got gap support maybe at 13.9. Those are a couple levels I'd certainly watch. So yesterday down almost 2% from the recent high. We probably are down 2%. And I thought 4% wouldn't really be that big a deal because we were up over like 14.6. That would take us down to 14,000. 20-day test to me is just kind of a normal pullback in an uptrending market or an uptrending stock. So I think everything looks pretty good here, but I expect a little bit more selling in this group and a little bit more buying in other areas that we've been seeing that money rotate to. I don't think that's done yet. Let's move on to the chart of the day. If you like the chart of the day, then you should go over to earningsbeats.com, scroll down and sign up, subscribe for our Earnings Beats Digest newsletter. It's free. It's delivered 3 times a week to your inbox. All it takes, name, email address, hit the subscribe button. We'll make sure we start getting it out to you. I like to look at things important to us at Earnings Beats. So we deal a lot with earnings, lots with gaps, gap support. Relative strength is huge. Candlesticks, price volume, sentiment. All of those things are really important to us. Big picture, I'll throw out a lot of big picture. We talk a lot about perspective. I think in order to be a successful trader, you have to have a healthy dose of perspective. If you get too caught up in the here and now, what's going on right now, or the news story of the day, I think you're going to get whipsawed. I think you really need perspective. You need to be objective and kind of throw everything out and look at the charts. You hear a news story, think about it. Okay, if you hear a news story, what should it impact? Look on the charts. Is it impacting those groups? If it's not, then I'm not paying much attention to the news story. I pay attention to what the charts are saying, not what I'm not watching the lips moving on CNBC. Could care less. Let's look at the XLI chart of the day. I've been talking about transports. I thought transports were beginning to run, and they are, and they're a big component of the industrials. So what's going on with the industrials? Well, personally, I think we're getting ready to break out. We've already had a big move. I said last week, we need to hold this 95 to 97 area. Well, almost immediately, we went up 4 the last 5 days, and now we're much closer to resistance than we are to support. This is a lengthy consolidation period after an uptrend. Any kind of a breakout here to the upside would be extremely bullish. And for those who have been saying, well, we're not getting wide participation, breadth is an issue, blah, blah, blah. Here you go. Industrials. We get a breakout here. We get a breakout on financials. Here's the XLF. We get a breakout through 33.50 on the financials. You get a breakout above, say, 103.30, 103.50 on the industrials. there's the next couple of breakouts for you. It's already repairing a lot of the breadth issues. So, I mean, expect as this continues to not hear anything more about breadth. That was an issue for a little while. Keep in mind, all these things are secondary indicators. Watch price. Look at what the S&P 500 is doing. It's going up. It's been going up. Series, higher highs, higher lows. Until that breaks down, I don't care what any secondary indicator is doing. When I called the top back at the beginning of 2022, what I said at the very beginning, I didn't say I'm guaranteeing we're going to have a cyclical bear market. What I said was the conditions had changed and there was a lot of things to be worried about. I didn't actually believe that we would be in a cyclical bear market until we started breaking down. That was your confirmation of all the warning signs. So even if you're looking at warning signs on the way up, that's great, but the warning signs are getting you nowhere because the market keeps going higher. You've got to have a breakdown to confirm anything. If you're thinking bearish, I'm not. I'm bullish. I've been bullish. I flipped almost on a dime. Actually, I did flip on a dime the middle of June right here last year. And hey, I didn't get the exact bottom right. We ended up going back down in October to set the final low. We didn't go much below that June low, but we did go lower. End of September, when we double bottomed, or when we hit that June low, I said, this is your second chance to get in. Now, for me, it was because I was seeing a lot of bullish under the surface signals. Again, didn't mean that we were in a bull market. Obviously, we weren't. We were down near lows of the bear market, but the signals were starting to change. And so what I talk about is the risk. It wasn't worth the risk of remaining short, really, in mid-June. And I think that's been proven over time. It wasn't worth the risk. Right now, I have no problem if you're in the spider selling. Why? Because we're up against a major resistance. I would have no problem. Personally, I'd buy back on the 20-day if I sold, and I'd also be prepared to jump right back into the spider if we break out. But just pure short-term money management, risk management, we're at a key resistance level. We're at 4,300. No problem whatsoever. I have no problem with anyone saying, hey, I think this is a good time to take profits. I 100% agree with you. Personally, I believe we're going through. That's just my own opinion. I've seen enough out of my signals. I've seen enough out of this advance. I've seen enough out of other indices. Sure, the S&P 500 hasn't broken out, but many of the components of the S&P 500 are also components of the NASDAQ 100. They've already taken the NASDAQ 100 well above the August high. And now as money rotates and we start to get more areas bullish, I don't think this 43.05 resistance level is going to last. So like I said, if you want to take profits here, I have no problem with it. But for me, I'm jumping back in on a breakout or on a pullback to the 20-day. I'm going to be right back in. Now, if we start talking about losing 50-day moving averages, or we start talking about losing the trend line, or maybe the recent lows, 4,100, 40.50, yeah, that starts to paint a more bearish picture. But if you go around in the stock market and always wait for your bearish story to unfold, you could be waiting a long time. All right. IWM, this is where, again, money is rotating. Look at the breakout. I mean, you can look at the chart, read what you want. I see a big breakout. I see volume picking up, massive volume. Small caps, great move to the upside. Getting out of the QQQ, which was the leader for most of the year, and getting into the IWM, or if you leverage the TNA, which is 3 times the IWM. I mean, I've been pretty clear on the videos with our members that I was building a position in the TNA on this weakness. I'm riding it. I see no reason to jump. I think taking some profits along the way Makes sense. If I sold or when I sell the TNA, I'll probably buy the IWM. I mean, if we get another day or two, it's just going to start getting a little frothy, just a little bit extended. And at that point, probably makes sense to take some of the leveraged ETF off the table and just move back into the IWM. If it pulls back to say a 20-day test, I'll be right back out of the IWM and into the TNA. I'll just flip. But right now, I love what's going on with the rotation. So I think it looks pretty good. Mid caps, same thing, breaking out above recent highs back in April. 20-day crossing the 50, PPO looking good. AD lines breaking to new highs. Volume trends, great. Hard for me to be bearish. All right, moving on. So let's talk about charts, and more charts. We got a lot to go through and not a whole lot of time to get there. So let's take a look. DJ USHR, love the breakout of this downtrend. This is part of the industrials. Everything I talk about going to be part of the industrials. So in this group, let me just go through some stocks quickly. We got Paycar. Look at that, trying to get through a breakout area. That level around $76 is going to be critical. Caterpillar broke the downtrend. Now uptrending, 20-day crossing the 50, looks good. Wabtec, WAB, again, downtrend line broken, moving through the moving averages. Watch for that PPO crossover, maybe just a little early here. FSS just broke out. Nice breakout. Not a huge volume stock, but I think the volume's liquid enough. But what I see is a nice little cup, little handle, and a breakout. This thing measures up to about $66. How about the Industrial Machinery Group? Big move here, getting up right at key resistance. Watch this group. Stocks, how about PH, Parker Hannifin, moving right up near resistance. GGG, this is Graco, breaking out, looks good. Ingersoll Rand, IR, breaking out, looks good. ROK, that's Rockwell Automation. Looks like a cup forming, not quite to the right side of the cup, almost. Otis, making a big breakout. How about the railroads? This has been a weak group. What's the like there? Well, how about the first close above 29.50 since the beginning of March? That's a start. What groups or what stocks within this group? How about CSX? Been trending higher. It's up near resistance going back to the end of last year. So it's showing great relative strength. UNP, this one's been beaten down a little bit more, but look at what it's doing. It's closing right near the highest level it's seen since back in March. Nice rally yesterday, increasing volume. I think this one is poised to make a run for 210, 215. All right, how about truckers? Truckers, well, we kind of moved up, pulled back, tested the lows, now starting to move back up again. I see maybe a slight break of this downtrend line. A move back through about 1450, 1455, I think would be a bullish move there. What truckers? How about LSTR, Landstar? Just made the breakout yesterday. I think that one looks good. ARCB, to me, it looks like it's bottoming. Look at that false breakout on Tuesday. Nice recovery on Wednesday. I wouldn't be surprised to see this one go right back through the moving averages. Aerospace. And we're going to have to cut this off after this one probably. Aerospace. Sideways consolidating after a big uptrend. To me, this is bullish. This is a continuation pattern. Yesterday, we closed at the highest level in about 6 weeks. So, potentially bringing stocks into play. TransDigm had gone through a little bit of a pullback to price support, starting to turn back up, hit a 3-week high yesterday. I think it's moving back toward its recent high. Boeing, talk about consolidation. This thing's been consolidating since breaking out above about 196. It's been between 195 and 220 almost the entire year. I'm waiting. I'm looking for a breakout on Boeing. Buildings and furnishings it was another group. Just want to show you a couple of stocks here. WSO, nice little cup forming there. AOS, little cup getting near resistance. Car, love this downtrend line break and the move up. I think this one looks good, and I think very poised to not only test the recent high, but I think break through it. All right, just a couple quickly on the earnings front. So let's take a look at the earnings. I'm going to go through and show you just the reactions. So TCOM reported up 4% this morning. Looks like going to be up around 35.75. I don't know. It's in a downtrend. I'm not sure I trust it. GME getting absolutely crushed, down 21%. That's not going to look very good on the chart when that hits. SMAR, this is a smart sheet software company, came out pretty nice earnings, more than double what was expected. Stock down 17%, down to 40. I think this level down in here is probably going to hold. So if we get some weakness, I think we'll probably come back up above it. This is one maybe that might not be a bad, for those who are really aggressive, might not be a bad entry at the very open. But let's go ahead and move on to the 3 you must see, wrap up the show. First, going to go with Goldman Sachs. Goldman, you can see it been downtrending, starting to move up with the financials. Watch to see if we can get a breakout above about 341, 342. I actually like the stock. I like the AD line moving to new highs. I think Goldman Sachs is just getting going. That's my take on it. CVX, this is back into that energy space. Chevron, I think we got a double bottom in play. We're starting to move up. A break above the 50-day moving average likely leads to a 170 short-term target here. And then the last one, Dow. This is the Dow Holdings. I like this break back through the moving averages. AD line starting to turn back up again. I think we're going to make a run here, back up, not just to the 57 area. I think we're going to get up to about 59 and test that February high. All right, that is it for me. I appreciate everybody tuning in. I'll be back next week, next Monday, for your next Trading Places Live over at earningsbeats.com. I hope everybody has a great rest of your day. Again, no real economic reports other than initial jobless claims, no real earnings. It's going to be trade on tacticals right now. Pay attention to the rotation. Everybody have a great day. Happy trading.